Hey guys, welcome back. I'm Jeb Smith, real estate broker here in Southern California. And today we're going to discuss the most 5 common mistakes when refinancing your mortgage. I'm going to break down each of these in a little bit more detail, help you understand why these mistakes happen and what you can do to avoid them. But before we get into it, I'd like to ask a favor. If you're new to me, new to my channel, it's all about real estate, whether it's helping people buy and sell real estate or subjects like this on the mortgage finance side. So do me a favor, if this interests you at all and you want to stay up to date on everything real estate related, hit that subscribe button. And as you're watching it, if you find value in the information, give me a thumbs up and ask questions. If you have them, leave them in the comments below. I always go back and address those questions directly. And I encourage you, if you have questions, to do that and leave them below. Now, I come to you as a real estate professional. I'm on the real estate side. I help people buy and sell real estate, but I have a background in mortgage finance. I owned a mortgage company for over 10 years, so I understand the mortgage side of things. But right now, I don't have a dog in the fight. I have nothing to gain from telling you about refinancing. I'm here simply to provide information to you, and hopefully it helps if you're going through that process. So let's get started and talk about the first mistake that most people make when refinancing. And that mistake is going to be not shopping around. And what do I mean by that? That's taking the first quote you get, whether it's online or through a mortgage broker or through a mortgage banker, at face value, and just taking that rate and moving forward without taking the time to shop around and see if you can not only get a better rate somewhere else, but also get better fees from somewhere else. So, there's this whole, misnomer, if you will, when refinancing, that if you continue to have your credit pulled, your credit score will go down, and that keeps people from checking other lenders and going through that refinancing process, or at least taking the time to shop around because they're worried that their credit is going to go down from the inquiries. Well, my understanding, again, I'm not a professional in that industry at the moment, but my understanding is, I think if your credit is pulled within a 45-day period for a mortgage, that all of those inquiries are looked at as one single mortgage. So it's not going to affect your credit if you do decide to go shop around. So I would encourage you, if you are shopping or if you are looking to refinance, make sure you're taking the time to shop around. Don't just go with the guy off the internet. Find somebody that's been referred to you from a family friend, from someone that's had a good experience. Same thing with buying a house. You want to make sure you're working with a professional, and by shopping around, not only will you know that you're getting the best rate and fees, but you'll also be able to talk to other people, find out what kind of person they are, how they communicate, because different people communicate differently with each other. And so sometimes, you might take maybe a little bit higher fees just because you like the communication and the value that someone brings to the table versus the guy that's offering the lower rate, or the girl offering the lower rate for that matter. So that would be mistake number one. Mistake number two would be focusing solely on the interest rate when trying to refinance. So just out there looking for the best interest rate. I say that's a mistake because most people focus on the rate, but what they're not doing is they're not paying attention to the fees. They're not paying attention to how much it's actually costing them to refinance. Are you paying points to get there? Are you paying, all these miscellaneous charges with processing fees, with different fees? I call them junk fees that lenders charge, because maybe they're providing you a little bit better rate. And so they're not getting paid as much on the back end, and therefore their other fees are higher. So don't just focus on the interest rate. Try to look at the whole picture. Are you paying points to get down, to that rate? What fees are associated with that rate? So look at everything, right? And don't get caught up in the APR versus the interest rate, right? Worry about the interest rate and then look at the fees that you're being charged to get there. And then third would be calculating how much it's actually going to cost you to refinance. So mistake number one was not shopping around. Mistake number two was just solely focusing on the interest rate. Mistake number three would be not calculating how long it's actually going to cost you, or how long it's going to take you, rather, to repay how much you're paying to refinance. So let's say hypothetically that you're able to drop your interest rate and it saves you for purposes of this conversation, let's just say it's $200 a month. And so $200 a month times a year is $2,400 a year in savings. But if you pay, hypothetically, say 6,500, let's say 7,200 for our conversation here, $7,200 to refinance. That means it's going to take you 3 years to recoup the cost of refinancing. So if you're maybe planning on selling in a year, or you don't know where you're going to be in a year, or whatever the picture is, it's going to take you 3 years to recoup the money that you just paid to refinance. And so keep that in mind when thinking about refinancing and having that conversation. How much is it going to cost you to get there? Now, there are a lot of lenders out there that will do no cost refinances. And what I mean by a no cost refinancing, they're not charging you points. They're not charging you any fees up front. You might have to pay title and escrow fees because those are basic fees, but they're not really charging you these fees up front. Some lenders will pay also the title and escrow fee. So you're not paying anything to refinance, but don't get caught up in not paying anything to refinance, but them adding it to your loan balance. Right. So if they say it's a no cost refinance, but your loan balance goes from, say, $200,000 that you owed to 205 because they're adding that $5,000 in closing costs to your loan, then that's $5,000 you're paying, whether you're paying it up front or through the loan. So just know that, that you need to calculate how much it's costing you. If you're adding any loan, any balance to your loan, you should be aware of that and be okay with it, right? So you need to understand what the process is with that refinancing. And that's why, again, it's always helpful to shop around and to check other people to make sure you're getting the best deal out there. The fourth thing that I believe is a mistake is extending your mortgage every single time you refinance. Now, I'll be honest, I've been guilty of this. I've refinanced a couple of times over the years, and I've always gone back into a 30-year fixed loan, and I haven't continued to pay down my loan. That can be a mistake, right? So keep in mind that lenders out there these days can do a loan specific to the terms that you want. So if you had a 30-year loan and you've paid 5 years off on it and you have a 25-year loan now, when refinancing, you could go back into a 25-year loan if you wanted and continue, the payoff date would essentially be the same as what you have now. But keep in mind when doing that, the savings aren't going to be as great as they would if you extended it back out to a 30-year loan. And in most cases, that's why people do the 30-year loans, is because the cost savings are more by extending the loan out 30 years. But to me, it's a mistake, even though I've made it several times. And I'm trying to now going forward is, if I do refinance into the term that I currently have on the mortgage. That way I'm not paying the mortgage forever. Keep that in mind when refinancing. Now, some people think I'm crazy by saying it now, and here's the idea. Most people don't keep their homes 30 years anyway. And so unless you're a person that plans on keeping the real estate, whether it's for an investment property or for kids later on or whatever the reason is, then it probably doesn't matter, right? Whether you refinance into a 30-year or not, because you're going to sell the property and never pay it off. My goals are a little bit different. I'm trying to keep properties and have them paid off and at some point be, something that pays me back, monthly with regards to rent or if I want to give them to my kids or what have you. So depending on your goals will depend on whether that's a mistake or not. And so keep that in mind when refinancing. And the last thing that I'll bring up that I think is a mistake, and this is the one that I see more often than anything else, is trying to time the market, trying to figure out when is the best time to refinance. Should you wait for lower rates to come, or should you refinance now? Well, the idea here in the market that we're in right now is that rates will likely trend lower. And with that being said, there's a lot of people sitting on the sidelines waiting for rates to go down because they think, well, if I just wait, rates are going to be even lower. I'll be able to save even more, which is a reasonable thing to think. But keep in mind, you don't know where things are going to be at that time, right? So if rates go down, could property values decline? They could. And so it could put you in a position where you can't refinance. Could you have a loss of employment? Potentially, depending on your business. You may have a change of employment. You could get furloughed. You could get laid off. maybe it's not something that is super, a super high percentage of it happening, but think that it can, right? So if it makes sense now, if the numbers make sense to you now, then it's something to consider, right? If the savings make sense and and the costs make sense, then I would say pull the trigger now. And if rates go lower in the future, then maybe you set yourself up for another possibility to refinance at that time. But gauging the market, trying to time the market, is a mistake in my opinion. I've seen it happen multiple times over the years where people have wanted rates to go lower or prices to go lower, and they continue either trending higher or never reach the point at which those people thought they would, and they miss out on the opportunity. So keep in mind, don't try to time the market. I've said it in multiple videos, a bird in the hand is worth two in the bush. So if it makes sense, do it now versus waiting. Take the savings, because the savings that you're recouping now by waiting 6 months, you just lost, say, 6 months of those potential savings. And so keep that in mind. So anyway, I hope that's helpful. What I'll do is I'll list all 5 of those things below. And again, I encourage you, if you have questions about anything I mentioned here, do me a favor, comment below. And if you haven't already, hit that subscribe button, give me a thumbs up. And as always, I appreciate you taking the time to watch. I appreciate your support. We'll see you again soon. Have an awesome day. Bye-bye.